Polygon Matic is very interesting. It's unique in the way that it tends to underperform long-term versus Bitcoin and Ethereum, but at the same time, the attention stays elevated. A lot of people search for the Matic token. A lot of people wonder what's going to happen with POL, and maybe at some point that attention can turn into outperformance. Let's have a look at what point in time Polygon Matic is comparatively cheap, at what point in time it might make sense to potentially double up the exposure. Let's have a look at the on-chain data, the data most people are not looking at. Now, this is not the first video on Matic on this channel. I've published many videos before on this channel, and we continue to look at activity and potential relative valuations to other major cryptocurrencies. Now, I'm using Matic and POL interchangeably because the two assets are linked one-to-one. There was a migration from the Matic token to the overall Polygon ecosystem token. It changed the dynamics around the usage of the token, but the prices are linked. This is Matic relative to POL. It's a one-on-one conversion. And so it's fascinating how POL or Matic related videos tend to get more views long-term over time. The average video is here indicated in gray. And the recent Matic token published 24 days ago initially didn't perform that well, but over time, as people search for Matic, it tends to outperform. The same happened for the video published 1.5 months ago, and the same happened for the video published 3 months ago. And again, the Matic price tends to have a hard time. It doesn't perform that well. And that's true since February of 2023. This is Matic relative to Ethereum. And this comparison does make sense because Polygon Matic is mainly a layer 2 scaling solution on top of Ethereum. But this underperformance is not pretty. It's 93%. Just have a look at this chart on a linear scale. Now, why did Matic underperform? One of the major reasons is a change in tokenomics. Because when Polygon Matic initially launched, the tokenomics were very aggressive. The number of circulating Matic moved from 3.2 billion all the way to 10 billion. And at that point in October of 2022, most people thought that that's it with the token inflation, that now all growth of the Matic network will directly translate into price appreciation. But things couldn't have been further from the truth. Matic made the migration to the new POL token and also changed the tokenomics, making the token inflationary again. And that disappointed the community heavily. Tokens continue to get issued to validators and to the treasury, which of course both is mainly held by the team and close associates. All of this wouldn't be too much of a problem if the usage of the network would justify such a token inflation, right? If the growth rate of the network is very steep, if Matic can outperform the other layer 2s, if it can stand the competition, then even an inflationary token wouldn't be too bad. The issue is that that's not the situation for the Matic network. Have a look at the TVL, or total value locked, or the capital that's on the Polygon chains. It peaked in DeFi summer, close to 10 billion, then crashed down massively and is now only at 2.3 billion. Yes, the TVL is stabilizing somewhat. It's potentially even growing since October of 2023. This is now measured in US dollars. And measured in POL tokens, it even looks better. But again, with the token inflation, there's constant sell pressure on POL. And that doesn't only depress the POL price itself, it also depresses all the altcoins that are traded on the Polygon Matic network. Because the altcoins are one-on-one linked, most of them at least, are one-on-one linked with the liquidity pools. So when POL is going down, that the altcoins go down automatically to the same degree. That's why the TVL is going down that much. Or at least that's why in US dollars we don't see as much growth compared to if we measure this in POL. So the growing network effects, they can't compound over time because there's all of those constant cash outs. Because there is a case to be made that the Matic network itself isn't actually shrinking. This is the number of active addresses. And if you just look at the very long term, there might be some slight growth. At least the number of active addresses does not justify a decline like this. Crypto is all about anticipating where demand and supply will go. And the supply usually is somewhat fixed. We can anticipate this with the tokenomics. And if the demand does not outgrow that supply expansion, we tend to have an underperformance long term. Now, maybe it's unfair to compare the Matic price to Ethereum because Ethereum now gets massively accumulated through the ETF and through the Ethereum reserve companies, the Ethereum treasury companies. So Ethereum has all of that demand that Matic itself doesn't have from those entities. And so maybe it's better to compare Matic to other cryptocurrencies. For example, this is Matic relative to Bitcoin. Unfortunately, also a rather constant underperformance, and that's now by 96%. So if we zoom into the recent development and we take the linear scale, this is how that looks like. Now, both Bitcoin and Ethereum have ETFs. Solana doesn't yet have an approved ETF in the US. It might come. Let's just look at those top three cryptocurrencies, Bitcoin, Ethereum, and Solana, and compare that to Matic. When we look at that chart, there's a case to be made that at least short-term Polygon Matic might be somewhat oversold. So this is Matic relative to the market cap of BTC, Ethereum, and Solana. And again, we see our long-term underperformance, no surprise here. But what is interesting is that we are not very close to the resistance. And those movements matter. This is a potential rally of 50% or potential sideways trading until the beginning of 2026. Because I'm always looking for market inefficiencies, right? If something is going down, that doesn't mean that I stay away. It can mean that there's money to be made by betting on falling prices or by betting on relative valuations, right? By betting on Bitcoin, Ethereum, and Solana outperforming Matic. If we do that with a setup called relative valuation trades, we can still make money. So we can basically flip this chart. But I think it's a bit too risky to do that right now. Again, because there is the potential or the risk that there will be a medium-term short squeeze where the price goes up by 10, 20, 30, up to 50%. But really, for the long term, the question is always about valuation. How does Matic compare to other layer 2s? Is it priced fairly, or has it already come down enough that it now makes sense to buy that bottom? So let's now not work with the short squeeze argument. Let's work with the idea that maybe Matic has already come down enough and that the long-term trend can turn around. Now, the market cap is currently at 2.7 billion, which is very close to Arbitrum with 2.8 billion. So does it make sense that Matic or Polygon has a very similar market cap to Arbitrum? Let's compare trading volumes. In the last 24 hours, we saw a trading volume on Polygon of 133 million. On Arbitrum, we had 835 million. So the Arbitrum trading volume, or the fees and revenues that get generated via trading, was 6.3 times higher on Arbitrum versus Polygon. And the prices, again, the market caps are very similar. Let's have a look at the total value locked. So on Polygon, that's 1.3 billion. On Arbitrum, that's 3.4 billion. So again, almost triple the size. The market caps are comparable, but obviously Arbitrum is getting used more, both for trading, but also for long-term holding. So a short-term rally is definitely possible, but long-term, I would not be surprised at all to continue to see Matic underperform the major cryptocurrencies by 50%, potentially even more. That's at least what a fair comparison to the competition, to Arbitrum, justifies. Now, besides the spot trading, there's also levered future contracts, right? So short-term leverage that gets into various cryptocurrencies, short-term, that can create price spikes and price depressions. So it's always interesting to look at how much leverage, how much perpetual trading futures volume is currently in an asset, how much open interest do we currently face on an asset. Now, in the last 24 hours, we saw 26 million worth of trading volume on Binance on the spot market. On the perpetual futures, we saw similar kinds of trading volume. So at least in terms of trading volume, there doesn't seem to be too much attention on Polygon right now. Most people that bet on POL tend to bet on rising prices. So the longs are paying the shorts in order to get more exposure. Most people are bullish on Matic on the perpetual futures. The issue is that open interest is still somewhat high, and there is correlation between the short-term leverage in an asset and the spot price. As there are more bets on an asset, the spot price tends to go up as well, especially if the funding rates are positive. Just have a look at this. The open interest is in green and the spot price is in yellow. And when open interest goes up, the spot price tends to go up as well. As there are less bets on the price and open interest goes down, the POL price, the spot price tends to go down as well. And currently we are not at historical lows in open interest. There's roughly 120 million. The peak has been at 180. But there's a good case to be made that open interest could easily drop again by another 60 million, potentially also depressing the Matic price. So really, very long term, it doesn't look great for Matic. Short term, it's already somewhat oversold, and we might see a short squeeze every now and then. We might get some positive news that could push up the price, but probably not by more than 50% relative to Ethereum, relative to Bitcoin, relative to Solana. The upside is clearly limited. The valuation is still high. The token inflation continues. And so long term, let's say over the next 6 to 12 months, I do think it's very likely that POL will underperform the major cryptocurrencies by around 50% again. Now, what we're seeing over here, that's the others dominance. So how much of all of crypto is currently in the altcoins that are not in the top 10? And that's currently close to 8%. And since the beginning of 2022, this is actually going down. And there's a fundamental reason for the altcoins to perform that poorly. And by the way, I expect this to continue to go this way. What we're seeing is a concentration of capital in the heavyweights. So in Bitcoin, Ethereum, and Solana, due to the ETFs and due to the treasury companies. Here's a chart you've probably never seen before. This is the Bitcoin market cap plus the Ethereum market cap plus the Solana market cap relative to the market cap of the smaller altcoins. So when we look at the top 3 cryptocurrencies and we compare them to the smaller altcoins, we can see a clear trend. The big, potentially less risky cryptocurrencies outperformed the risk on assets, the small micro caps, by more than 200%. And for some specific cryptocurrencies, that outperformance is even more pronounced. This here is Balancer relative to Bitcoin plus Ethereum plus Solana. So when we just look at the last 2 years, this outperformed by more than 1,200%. And that's no coincidence. This happens because of fundamental reasons. It's because in this case, the balancer supply, the supply of the BAL token went up massively because of token emissions, because of usage of the platform. So platform usage gets incentivized by an expanding supply, and that expansion in supply cannot keep up with the demand, thus the underperformance. Thus, all those bigger cryptocurrencies, Bitcoin, Ethereum, and Solana did so much better. And so this is just an example of how the mechanics in crypto work, right? Have a look at this again. This is the balancer supply. It keeps on growing because of liquidity mining, and those mined BAL tokens get sold over time. And we've got these effects regularly in crypto. There's an entire website called Tokenomics.ai that's just focusing on the token emissions of various altcoins. Every single week, we see roughly 800 million worth of tokens hitting the market. And the problem is that all of that supply has to get absorbed by the retail investor. And it has to get absorbed faster than the purchasing rate that we see through the ETFs and through the treasury companies of those larger caps. And long term, that's very unlikely going to happen. The issuing rate is just too high. And that's just of the tracked tokens on this website. And so I'm trying to make money where there are market inefficiencies. And I do believe that the altcoins are still inefficiently priced in the way that there's way more selling pressure than there is demand. 800 million is way too much. If the altcoin market suddenly drops by 50%, then this will only be 400 million. And that could get absorbed a bit better. But right now, I really don't see the case how the altcoins can outperform the major cryptocurrencies. There won't be a treasury company for Floki Eno anytime soon. And so the way I make money with those inefficiencies is by betting on rising prices of Bitcoin, Ethereum and Solana, and at the same time I bet on falling prices of all of the crappy altcoins, the altcoins that have a very quickly expanding supply that tend to underperform the major cryptocurrencies constantly. I followed this strategy now for roughly 4 years. So this is my personal performance. It's a monthly chart I've pulled out of Microsoft Excel, and had I just dollar cost average into Bitcoin, I would have gotten this light gray return over here. Instead, because I also bet on falling prices of various altcoins, I got the return here in black. I did this mainly with borrowing and lending platforms like Aave, etc. But I recently switched over to perpetual futures, and that also worked pretty well. So I did this here with my personal capital as a first pilot project and turned roughly 40k into 60k in just 2.5 months. And this is where I think I differentiate myself with this channel from all the other crypto channels. Most other crypto channels are not willing to share their actual performance. But I didn't want to stop there, right? If I make money, how can you make money with the same strategy? It's not always that straightforward. So I opened a capital pool 1 month ago. And lo and behold, this pool is also appreciating quite quickly. Not as quickly as the initial test. So annualized, this gives us 61%, but still the premium members of this channel that are invested in this pool are currently making exactly this return. Now, because there was so much demand for this capital pool, I had to close deposits. So I will continue trading with that pool until end of the year and then open another one at the beginning of next year. But until then, you can still copy my trades. So I share every single trade that I make over here in the Gerhard's trade channel. So for example, over here, I'm not sharing now the recent trades, but here on the 23rd of July, I bet on falling prices of WorldCoin, and various members copy traded and made some money as well. And so I was thinking, how can I set up this membership in a way that it's as risk-free as possible for you? And I came up with the following. If you decide to join the membership here, you just have to watch 2 videos. The first one is this one here, using perpetual futures on Hyperliquid to bet on relative valuations. The second video is over here, risk management with relative valuation bets. So that's roughly 1 hour of content. You're simply just following the instructions explained in those 2 videos. Afterwards, you're joining all the premium groups. Then I get a notification and then I will send to you the one trade that you just have to copy trade, that I have the most conviction in. If with that trade you are not making money after the first month of your membership, then I will refund the entire membership fee to you. So this is the trade that I will share with you. It's not the balancer trade, it's something else. It's something that has more upside potential. And since beginning of the year, it went up by 350%. And yes, there is some potential risk for me that you might not end up making money in the span of a month. But I think the risk is manageable, especially given that the performance recently is accelerating again. And the reason for this outperformance is the exact same as for Balancer. It's an expanding token supply, and the major cryptocurrencies just outperform this asset. And they do this long term because all of that supply, that additional issued supply, hits the market, putting constant selling pressure on the asset. So if we make the relative valuation trade, we can get this performance relatively constantly. And so here's the price for a month. It's currently $125. Again, if you don't make any money in your first month with that trade that I'm sharing with you after you join, you will get that money back. Just message me and I will just refund you, no questions asked. If you want to become part of the next copy trading capital pool, then you might consider joining for the annual membership as well. This is where I share the automated copy trading first. So beside that early access to copy trading, you of course also save some money, $250 per year. If it's your first time here on this channel, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.